A simple straight to the point video on why I think a lot of the SCHD bears are completely wrong, and why, at least in my opinion, I think SCHD is still offering a massive buying opportunity for long-term investors as of right now. Now, I'm going to explain some of the points the bears have and some of the points that I have as an SCHD holder. So if you hold any shares of SCHD as of right now or are planning on doing so, make sure to stick around and hear me out. Drop a like down below and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, let's talk about one of the main things that a lot of the SCHD haters, the SCHD bears, point out when it comes to this ETF. They point out the obvious that the price return over the last, say, 1 to 5 years has not been all that great whatsoever, considering over this same exact time frame, investors could have potentially made a lot more money by choosing different ETFs throughout the markets. Now, I will say the bears do have a little bit of a point here, considering back in May of 2021, which is around 3.5 years ago now, SCHD was trading at basically the same exact level that it's trading as of current. And since then, this ETF has done nothing really more but trade down and trade sideways, which has definitely hurt the total return within that time frame. Now, the easy response to an SCHD bear that's pointing out the price performance or lack thereof over the past, say, 3 or so years, the easiest response possible is that that investor needs to zoom out and see what SCHD has done over the past 10-12 years. Even so much to the point to where if we were to compare SCHD to the S&P 500 or the SPY ETF and look at the total return from both these ETFs over the past 12.27 years. A $10,000 investment into both SCHD and SPY back in 2011 would have turned into $43,000 from SCHD and $49,000 from SPY. Now, although SPY did return an average of around 1% more as far as total return ongoingly per year, the Schwab US Dividend Equity ETF was not far behind, not to mention investors that bought into SCHD back then got paid a heck of a lot more cash flow from that of SCHD in the form of dividends that some investors probably used along the way. The other thing that I have to say about being very critical about the price performance of SCHD over the past, say, 3 or 4 years now is a lot of investors are not buying into SCHD to hold onto this ETF for, say, 1, 2, 3, or 4 or 5 years. This ETF, at least for the most part, and correct me if I'm wrong, has a group of investors that are looking to buy and hold ETF long-term into the future. And if that is the case, which again, in my opinion, that is the case, I think that some of the bears need to zoom out and go back to 2014 where SCHD was trading at around $39 or $40 and realize that the ETF has doubled in share price since then. The other thing the bears are very critical of when it comes to SCHD, which I also want to dig into, is the overall top 10 holdings as well as the sector breakdown. Now, like we talked about earlier, SCHD has lagged the overall market quite substantially throughout multiple time frames over the past, say, 3 or 4 years. And this is partially due to things like the top names within SCHD just having some bad luck and being at the wrong place at the wrong time. For example, one of the top 10 holdings, Verizon Communications, which at one point was doing pretty well, has definitely not been doing as well over the past 5 years, which again, as of right now, Verizon does make up a decent portion of SCHD overall. Now, although I am an SCHD shareholder, I would have to sort of agree that the top 10 holdings are not necessarily my favorite top 10 companies throughout the entire market as of right now. But the good thing about SCHD and the good thing about the index that SCHD tracks is that different names are going to be added and taken out of the index, which means there's going to be different names within SCHD ongoingly on a yearly basis. Not to mention every so often there's rebalancing that goes on, so names are going to be shifted around also, which once again, and of course I could be wrong, I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. I'm wrong about this, but I'm probably not. SCHD long term is going to level out and it will continue to move up long into the future. Now, the last thing I want to talk about that I don't think this ETF gets enough credit about is the fact that this ETF does have around a 3.5% starting forward dividend yield as of right now. And of course, you guys know what I'm going to talk about next, the dividend growth that SCHD has seen historically. Now, dividend growth, for those of you that might not know, is basically how much in dividends an ETF or stock pays versus the last year. Like, for example, in 2018 of December, SCHD paid 41 cents per share. 1 year prior to that, in 2017, SCHD paid 34 cents per share. And now fast forwarding a little bit, just as of this last December, SCHD paid 74 cents per share. Now, every investor is going to have a different strategy and are going to have different things that they really look for when it comes to choosing the right investment for their own personal preference and for their own personal risk tolerance, if they're seeking total return or more cash flow, etc., etc. And I think it's very important to sort of narrow down what you personally are looking for when it comes to investing your hard-earned money in the stock markets or wherever else it might be. But for dividend growth investors like myself that are seeking to make a good amount of money ongoingly on a consistent basis from dividend income, but also want to buy into an asset that has the potential to grow and grow and grow over time, I don't think SCHD always gets the respect that it deserves, considering just how much dividend growth this ETF has had consistently over the past 12 or so years, all along while for the most part offering investors a nice starting dividend yield. So if an investor was to start investing into SCHD today, they would still be able to generate a decent amount of cash flow from day one. Now, don't get me wrong, there's other super high quality dividend growth ETFs across the market, and a lot of these different names are also going to find a place in my personal portfolio as time goes on. Something like the Vanguard Dividend Appreciation Index, which currently offers a 1.84% starting dividend yield, and also, to be fair, has had some massive, beautiful dividend growth historically. Not to mention this ETF VIG has also seen some massive price return. But once again, for the investors like myself that are not only seeking total return over the next, say, 10, 20, or 30 years, I personally, as an investor, do seek total return, and it is very important to me. But I'm also seeking out to make some decent cash flow from day one. I want to, for the most part, invest into different stocks and ETFs that are going to give me a nice sized dividend on a quarterly or monthly basis. And to be fair, SCHD's dividend is just about double that of VIG. Now, again, I get it. A lot of bears are going to say that, well, just because SCHD pays more as far as cash flow in the form of dividends go, it doesn't mean that SCHD is going to outperform VIG, for example. And I totally get that. But once again, for investors that are seeking cash, income, dividends, whatever you want to call it, SCHD offers exactly that, but also offers a lot more. But with all that said, I do think that over the next few years, it's going to be very important and crucial to see how SCHD recovers or potentially doesn't recover as far as ETF price goes. And I think it's going to have a lot to do with which stocks end up in the top 10 holdings. Now, on top of that, I've talked about this before, but I also think that when it comes to SCHD, I do think that the ETF consistently needs to keep growing their dividend to keep investors like myself very excited and bullish on the ETF altogether. But all in all, I still do think that the way that SCHD has been trading over the past, say, 1 to 3 or 4 years, I still personally do think that when we zoom out in 10 or 20 years from now, it's going to look like a small time within history where the ETF traded sideways, which again could potentially be offering investors like myself a massive buying opportunity. But when it comes to SCHD, the Schwab US Dividend Equity ETF, now I want to hear from you guys down below. Are you currently as bullish long-term on this ETF like me? Or have you given up on the dividend growth king altogether? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.